If you own crypto and you want to liquidate some or all of your crypto portfolio today or in the near future, this video is for you. Basically, I'm going to walk you through how to cash out millions in crypto without freezing accounts, needing to send hundreds of transactions, or spreading your money across different accounts in questionable jurisdictions. This is the same blueprint and principles that our team uses to help some of our wealthiest clients with crypto investments navigate their banking options and ultimately decide how and where to cash out their crypto. Now, it's important to point out we're not talking about your tax obligations. Most of our clients, they already have established themselves in low tax, no tax, or territorial tax jurisdictions. And if you haven't taken this step, you should confirm your tax obligations prior to cashing out your crypto investments. And as always, talk with a qualified tax advisor. Now, before jumping in, if this is your first time on the channel, my name is Chris. I'm the head of banking relationships here at Global Banks. We help individuals and businesses navigate cross-border banking and financial services, and this includes helping people from around the world with crypto-sourced wealth. I'm regularly discussing crypto client profiles, onboarding challenges, and compliance requirements with the best banks in the world to better understand how banks treat crypto-sourced wealth and which banks are best positioned to serve you. Now, in this video, I am going to be focused on people who are looking to cash out at least 7 figures, so $1 million of crypto or more. Though I'll also be touching on an interesting opportunity for anyone looking to deposit between $100,000 and $250,000 towards the end of the video, so stay tuned if that's you. But before we dive into where you can cash out your crypto, there are 3 fundamental points that I need you to understand. And the first point is that your crypto profile, it will determine your options. The second point is that banks need to be motivated to serve you. And the third one, which is going to be a little bit controversial, so bear with me, is that compliance teams are your friend. So let's start by digging into the profiles for a minute. And just to be clear, we are only talking about individuals and personal holding companies here. I'll cover crypto business banking in a future video, so if that's a topic that you're interested in, make sure you're subscribed so you get notified when we publish that video. Now in this video, we're gonna be focusing on 3 main crypto profiles. And the first profile, we're gonna call early adopters. These are folks who bought into something vanilla super early, Bitcoin or ETH, and basically never sold. This can also include people who continued to buy over time and maybe have a little bit of trading activity, but not much. And no surprise here, banks that onboard crypto source wealth, they love these guys. And the reason is, these early adopters, they have limited transactions for the bank to trace, their wealth is easy to attribute to the massive increase in the value of their portfolio, and they have an easy to understand backstory. They bought, they held, and they got rich. The second profile we're gonna consider is that of crypto traders. We're gonna use this term loosely to include anyone who was actively trading. And I'm guessing this is gonna be most of the people watching, even if they weren't actively trading on a daily basis. To successfully open accounts as a crypto trader, there are some special requirements you will need to meet. First, you'll need a clear source of original funds, whether that's from personal savings, your job, inheritance, etc. Basically, you need to be able to prove that the money you started with as a trader was yours. The second thing that you're going to need is a clear trading history for the majority of your transactions, which should be made through reputable exchanges, and the fewer exchanges you've used, the better. Now, crypto traders, they do have a harder time opening accounts compared to early adopters for the simple reason that banks, they have a harder time tracking your trades and making sure your crypto isn't tied to any unsavory activities. That's why banks that tend to work the best for crypto traders, they either bring in outside help, like auditors who specialize in crypto transactions, or the banks themselves, they have developed their own in-house compliance capabilities. We'll talk about where to find these banks in a minute. The next crypto profile that we're going to talk about, these are the black market buyers. And a lot of these guys, they're libertarian Bitcoin purists. Think wallet-to-wallet transactions in parking lots, bags of cash, and untraceable sources of wealth. But despite their deep-seated hate for fiat, the global monetary system, and basically banking in general, they want to take some money off the table, buy some real assets, maybe send their kid to private school. And so they're looking to cash out some of their crypto. Well, no surprise here, these guys are not easy to bank, and any competent compliance team is going to struggle with the related risks of onboarding these clients. There's just too many broken links. So if that's you, you are going to have a very hard time finding suitable banking options. Now, those are the 3 profiles we're going to be talking about in this video, which wraps up the first fundamental point, which is that your crypto profile will determine your options. Now, let's talk about the second fundamental point, which is that banks, they need to be motivated to serve you. And let's make this really clear. What I'm saying is, banks, they need to see you as a profitable client. That's it. And this is where most people with crypto source wealth get tripped up. They want to open accounts with the best banks in the world, but they don't realize that the banks need to want them as a client as well. And from the bank's perspective, there are only 2 parts to the equation. First is profit, how banks make money off of a client. And the second is cost, how much money it takes to onboard and maintain that client. The profit piece is pretty straightforward. It comes down to the products and services you plan on using, or the amount you plan on depositing or investing through the bank. Now, you might be thinking, Why would I ever invest through the bank? That's dumb. I just made millions of dollars investing in crypto. I don't need the bank's help. And if we were talking about retail banking on Main Street, I would completely agree with you. But we're talking about cashing out millions of dollars. And that means we're talking about private banking. And investing through private banks isn't only about investing. It's about using the available products, services, and creative financing tools to minimize the taxes you pay and maximize the ways that you can make your money work for you over and over and over. The actual investing part is only one leg on the stool. And how to effectively use private banks is probably one of the most misunderstood topics in banking. I'm going to be diving into this in an upcoming video and sharing all of the ways that the rich use private banks to supercharge wealth creation. So if you have any interest in private banking or international banking more broadly, make sure you're subscribed so you get notified when that video gets posted. Now, the cost side of banking is where things can get a bit tricky, especially for high-risk sources of wealth like crypto, because the compliance cost of onboarding and maintaining crypto source clients is usually higher. But it's not just the bank that has to pay. If you fall into the crypto trading category and the bank needs to bring in outside expertise like an auditor, the cost of auditing your transaction history is almost always going to fall on your shoulders. That means you're looking at $5,000 to $15,000 depending on the firm and the complexity of your trading history in auditing expenses before you even open the account. This isn't always required, obviously, but it is common, especially with traders with higher value accounts, say between 5 and 10 million and up. Now, the motivation for the bank, and in certain instances, even the banker, it can change. But the key takeaway here is always going to be the same. If you want to increase your chances of successfully opening with banks that will allow you to cash out millions of dollars in crypto, show them how you are going to profit the bank, either through bank products, services, or making big deposits or investing. And the final point that I want to cover before talking about where to open accounts that allow you to cash out your crypto source wealth is that compliance teams are your friend. Yes, I know compliance teams, they're supposed to be the big bad wolf in banking, always making your life hell, requiring more and more documents, etc., etc. And that can be true in certain countries and certain instances. But in the countries that we're about to discuss, that's not the case. Instead, in these places and the types of banks that will allow you to cash out millions in crypto, compliance teams, they're the gatekeepers. So instead of trying to fight against them, you're better off making them like you and making their life as easy and as straightforward as possible. That can include your complete crypto trading history, receipts from your initial deposits onto exchanges, and proof of wealth or income supporting your original contributions. The point is, don't go in blind. Prepare yourself and your records and try to be as helpful as possible because it will benefit you in the end. Now, let's talk banking options. I'm not going to go into the specific banks, but I am going to share the best banking jurisdictions that we've come across when helping individuals with crypto sourced wealth decide where to bank. If you want specific banks and even more details on the profiles that I just mentioned, we cover all of those details and more in our ultimate guide to banking for crypto investors, which you can access through Global Banks IQ. Just go to globalbanks.com/IQ to learn more. Okay, countries. No surprise here, the best countries for crypto source wealth are home to banks that understand complex client profiles, high-risk sources of wealth like crypto, and even complex trading profiles. And that means private banks. And there are a few countries that are dollar for dollar the best when it comes to cashing out crypto. So, first up, Switzerland. Now, Swiss banks, they basically invented complex client onboarding. And in the last bull run, they really dialed in their processes, product and service offerings, and their ability to help people cash out large amounts of crypto. If you want to consider Switzerland for cashing out your crypto wealth, you usually need to be looking to bring over between $3 and $5 million, depending on the bank and the complexity of your profile. Now, not to be outdone, Liechtenstein is equally adept at onboarding, supporting, and cashing out crypto source wealth, and high-risk client profiles more broadly. In fact, the big difference between Switzerland and Liechtenstein is that the cost of entry is a bit lower. Like I said, $3 million to $5 million is usually enough to get you into Switzerland, but in Liechtenstein, you're looking at somewhere between $500,000 and $1 million, though for higher risk client profiles, the number can obviously go up quite significantly. Now, there's a third country that I also want to mention, and this one might catch you by surprise. It's the United States. At the start of this video, I mentioned that there's an option for anyone looking to cash out lower amounts, say between $100,000 and $250,000, or basically anywhere from $100,000 and up. Well, these options, they exist in the United States, though the US also has options at the $1 million+ level as well. The problem is, these US banks, they struggle with more complex client profiles, especially when dealing with foreign non-residents. But if you already have a US account open with a major US bank, that could serve you well when it comes to cashing out crypto. On the other hand, if you want to withdraw between $100,000 and $250,000 and you're not already a client of a US bank, you're not a US citizen or resident, you will have far fewer options available in the US. And in most cases, deposits, they will need to be seasoned for an extended period of time, meaning that they need to sit on an exchange before being deposited into the bank. The period can range, but in most cases you can expect between 3 to 6 months before compliance teams are comfortable onboarding you. So let's do a quick recap here. We've got 3 main profiles with varying chances of opening accounts: early adopters, crypto traders, and black market buyers. Early adopters with limited trading, they have a high probability of opening accounts. Crypto traders can open, but they will face more scrutiny. And black market buyers are going to struggle opening basically anywhere. Now, early adopters can open in most places, including Switzerland, Liechtenstein, and the US, even as foreign non-residents. Crypto traders, they can open in Switzerland and Liechtenstein, but they will struggle in the United States unless their funds are seasoned and they have sufficient documentation to prove their trades. And black market buyers, they are really going to struggle in all 3 markets, though they may have options in certain instances if they can increase deposits to a very high level, usually above $5 million. And like I said, if you only want to deposit between $100,000 and $250,000, you'll have options in the United States. Now, if you would like to explore these countries and other options that might work for you, you can grab our free guide, Where to Bank Offshore, from the pinned comment below, or you can watch this video right here where I share 5 of the best banking hubs available in the world today, including who is best suited to bank in each and important account opening details you won't find anywhere else. So go ahead and click that and I'll see you right over there.